Hey everyone, and today is a daily recap. Today was a usual day. I had a loser, a manually closed minus 0.5, and a winner on gold. So let's quickly look into them. So let's start with EURUSD. So on EURUSD, I was looking to continue this like crawling down movement here from daily, from 4 hours, as you remember from the previous outlook. I see this as a redistribution model. And so let me play it through here. And then on 1 hour, we have this move on 1 hour, mitigation here, and then creation of this move on 1 hour, on 15 minutes, and so on. So the biggest problem with this kind of setup is that overall, as you can see, it is like quite rangy overall. I mean, it could go, but if you look structurally, so sorry, by the way, it was on 2 hours. So if you look structurally on 1 hour, we are still inside this huge up movement here, and then we mitigated here, here, created this some kind of a chain. It's not a good chain in a way that it's just horizontal, but overall then we created this clear up push, and this is an internal shift on 1 hour basis, of course, in an overall bearish environment. So I was okay with taking one trade here. And but the biggest problem with this trade is even not middle timeframes, but actually timeframes that are close to entry timeframes. So look at this. So even if we consider this as an impulse, so if I take this this part of price action, what is this model? So we are moving up, 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 and then one shift to the downside, as you can see on 1 minute. So one shift to the downside on 1 minute after up, 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 and down. What is that? So this should be treated in isolation as a reaccumulation, so a bullish model, yeah. But because of overall bearish context, I decided to enter. And actually what the price did, so I have some notes here that I'm expect maybe I need to close at break even, because the price is just ranging, you know, just ranging. Then it created this move to the downside like this. And then I have a note is that if this move will not continue, then we should see a break to the upside definitely, because what we have here, except of the model of reaccumulation and even some bullishness from middle time frames, we can also see this chain as you can see. So first of all, we have a reaccumulation, so this mitigation, and then the price, instead of failing to go up and moving to the downside, aligned with my idea, instead it started to create, after this entry point of mine, this upwards moving chain, you know, and then created this move to the downside, clearing something here, but overall holding this initial 5-minute push, you know. So initial in 5 minutes we had this up movement, then mitigation. So let me clear. So on 5 minutes we had this up impulse, then mitigation of a zone, and creation of internal structure with this build up. So basically it's just natural for the price. What it did later is created an up break, mitigated here. So at this point I was stopped out on the trade, mitigated there, and created continued the up movement. So my idea was not confirmed and didn't work out, and that was my loser. Okay, now let's look at gold here. So at gold, my idea was that first of all, it is historically bullish, just historically bullish for monthly. On weekly, it is more bullish than bearish, you know. It's 50-50, but like 51 for 49, 51 in favor of bullishness. Why? Because we just have a bullish structure. Again, what is this model? First of all, we have up, 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 down, and then up and up. So what is this? this is reaccumulation. If we take a look at here, this could be treated as accumulation. Why? Because we just have back and forth, so up, down, up, down, up, down, with recent up move. This recent up move, which can be signalizing about possible accumulation. The problem with this is that we are in the pullback phase on the weekly, yeah, and we have these zones to mitigate. However, overall, we have at least some bullishness there. On daily, moving bullish to a possible reaccumulation, so still moving up. However, recently, if we are talking about structural, like plain structural vision here, then of course we are bearish. We had this break of structure here, and then basically here, and this is a development of a bearish impulse. But again, it is only one bearish break after a series of bullish breaks, so it is still could be treated as reaccumulation. And even if it is a bearish break to continue to the downside, then maybe it's time for a pullback. So to be honest, you see, I'm playing a bit discretionary here, because the situation is looking almost the same like on Euro USD. Basically, they are correlated to some extent, I think, or at least they are looking similar, some kind. They have some kind of similarity at the moment, but gold is more bullish overall from a weekly perspective. And on 4 hours, what we have is again, this is the difference between gold and Euro USD, is that if we look at 4 hours, we don't have a specifically bright, a specifically like clear downtrend. What we have is just back and forth with this recent move to the upside, and that's all. So this brings me to a possible idea that this could be an accumulation to go a bit higher. And specifically on 4 hours, I was looking at this chain. So we have this up movement, mitigation here, and a reaction coming back into a zone. And on 15 minutes, we are starting. So on 15 minutes, we are just showed this extremely overextended range. So I was looking more on internal structure. And again, I'm keeping in mind that I'm situated in a possible, okay, I'm not saying that will go here for 100%, but possibly this is a start of the up move development. Why? Because we have this up move, and possible development here. Even if it's bearish logic, it could go a bit higher, specifically from this zone, because it's far below this recent break. So this is my idea for this trade. And so again, on 5 minutes, we have this. We have down moving market, then break to the upside, mitigation of this, break to the upside, development of inside structure, break, and one break to the downside, mitigation of this zone. And again, if we look in isolation, then this could be first reaccumulation in the move to the upside. And then here, when the London was open, I was just looking at a recent development of price on lower time frames, and notice this change. So this is a 5-minute, 15-minute zone. We have this fractal shift, mitigation, continuation here. Then mitigation of this zone, continuation. Mitigation of this zone, continuation to the upside with recent structural break to the upside. And I treat this, I treat specifically this as parts of this chain. And the problem with this entry is that all previous entries are fulfilling the chain, so forming a cluster, yeah, when every move is mitigating previous move. But this move is quite high up and still has some unmitigated areas for potential reaccumulation, especially this one. Why? because this is the last zone that mitigated the last zone that mitigated the last zone, and so on. So it looks like the move started from here, but even with this I was okay with giving one try here. So the price respected the zone, started a reaction, didn't go break even here because I needed more confident break. And then price, after this I expected it to go higher, but instead it started to show a reaction from this range, and then while the price was falling here, I closed manually at basically at minus 0.5R, and then I let the price for a bit to come back later. So it created some down moves here, created this really nice and clean move for short-term bearishness, and then hit this zone that I mentioned from before. So this zone, which is a part of a chain that we discussed, and also it's a part of a 5-minute range. So overall price action here, to be honest, looks quite messy, quite weak, but again it's okay to try to enter here. So we have this local uptrend and recently mitigated the zone, which is a part of a chain, and then created this up break here. And on mitigation of this root of the move, refined root of the move, I entered, but not here, I think here. So yeah, when we have mitigation, and then the price started to move up. At this point I moved my stop loss to 0.5 to here and waited for price development. So this is what the price did. So as you can see, it continued to build the up movement. So broke to the upside, mitigated this bigger zone, broke to the upside, mitigated this zone, mitigated this zone, and from here started a move to the upside. Basically here I moved to break even and then waited for 5R to manage, but price pushed really aggressively to the upside, and at this point when we had a push to 7R point, so this is 7R, I closed 95% for 6.6R profit, and then trailed the rest, trailed like this to this low. Then price created this break, trailed to this low, price went higher, created a pullback, and created a break. So after this break I moved my stop loss to here. Then price went even higher and I moved my stop loss to here. Then price went even higher and I moved my stop loss to here. This is a 10R point, which brings me overall to 7R on the trade. And now we have so let me check. And now we have even more breaks to the upside, so this live price. So I will trail to this low basically at 14R point. So let me do it. Yeah, so trail to the stop. Yeah, and this is my day. So for the mindset part, what I want to tell is that, you see, the problem, immediate problem with this kind of trades is that my automatic thoughts of everyone has like automatic reaction, yeah, to what is happening in the market. And my main thought, as you can think yourself, is that, oh, if I didn't close here, I could have so much more profit. So basically 2 times profit I could have, but this was my management plan, so I planned to trail aggressively after 5R. Actually, yeah, it's still like 50-50, okay? It's still 50-50 because my formal plan was to trail with exactly this. So this was my exact plan, which I succeeded in trailing for partials. But I closed most of the position at 7R point, and again, it's like so for some people it could be a mistake. For me, it's just a discretionary decision. And if you have something like this, if you start to think that you lost some profit, again, you need to remind yourself again and again that our job is to take some part of the move, and it's not even necessary to enter here. I could enter here, for example, and then could have my 5R. Someone is entering here, and maybe the price will even push harder and give him his entry. And then someone will enter on the mitigation of this zone. And overall, we will all profit from this one push to the upside, but in different places and with different profit targets and management plans. And so again, this kind of result for a trade is already, so for me it's like a really good week, real good day, real good months. I mean, for other people, like a month when you have profits that I have, maybe it's like too small, but for me that's enough. And you need like to remind yourself that if you can replicate this kind of results, this kind of weeks, maybe during 1 year, then you can achieve your goals for funding or your goals for profits. Again, if you don't have a big size personal account, then you basically need to get funded, or you need to play in a real long term, because trading with a small account is really hard if you want to live from it. Yeah, so you need to keep emotional balance, and yeah, see you in the next review. Bye.